Interesting conversation that I'm having with one of my clients as we kind of work through their tax plan. So they're in a position where they're comparing purchasing a vehicle for their business, and they have, they have a business, they have real estate, they can legitimize the purchase and actually use it for business purpose versus them actually acquiring a piece of real estate. So they're looking at the two different choices and trying to compare the two. And here are some of the things that we kind of discuss. First of all, I don't like to compare the two like that. I know we're talking about like tax planning and saving taxes and all that type of stuff, but you got to think more long term. So a vehicle, on one hand, let's talk about that first. That's going to be an expense of the business that they're going to have, so they're going to spend some money for it. Yes, they're going to get a current year tax deduction for it if we execute it properly. But that vehicle, is going to depreciate over time, and this is an expense of the business. It's a car. Right? You might get some smaller tax deductions from it every single year. You put fuel in it and you take the actual method. So you're writing off a whole bunch of stuff. Cool. But compare that to real estate. Real estate I look at that more as an investment. That's more as an investment, which is also going to give you a current year tax deduction, but it's going to give you future tax deductions as well. All kinds of deductions that come from that, which a lot of people don't talk about. But not only that, it's going to give you a current year tax deduction, plus you're going to get cash flow from it, plus someone else is going to pay the loan back. Not like with the car, you're going to have to pay that back. Plus you're going to get appreciation is going to go up in value. Like you get all of these different things from real estate because it's an investment that you're comparing to this vehicle. So it's just an interesting conversation that we have. And I don't like to kind of compare. It's like apples to oranges at the end of the day. But I understand why they were asking that question, because they're looking at, how much we saving in taxes. And they're in a position where they can do both. And what we ultimately are going to do is align it to their goals.